this is how you're logistically gonna do velocity banking. I got props, okay? So you've got your job or wherever you get your income from, right? Your income goes over into your checking account, right? Oh, hold on. This is your checking account, right? So you got income going into your checking account. And these are vitamins, so don't come for me in the comments. These are vitamins. Okay. This is your money in your checking account, right? Money goes into your checking account. Then you have your line of credit, right? So how velocity banking works is, what do? All of your debt goes into your line of credit, right? So you're paying everything out of the line of credit. So all of your income goes into your line of credit, right? And out of your line of credit, your debt is already in here. So you're paying all your bills, your rent or mortgage, every expense that you have is getting paid out of the line of credit. Then you're like, Ari, how do I pay my rent out of the line of credit? It doesn't have a checking or a routing number, right? What do? You put it back into your checking account. Your rent is $4,000 a month. Put $4,000 a month back into your checking account. You're paying your rent, right? Then whatever bills you have that are on auto pay, you put it back into the checking account. All the bills are paid, right? That's how the money moves back and forth. So you may be asking me, okay, well, Ari, why don't I just keep my money in my checking account? That's not how velocity banking works. Logistically, you're putting all of your money into your line of credit and you're paying off your debt and your bills. Logistically, you're moving money back into your checking account because you can't pay rent or mortgage directly from the line of credit like you can do a checking or savings account. Does that make sense? So literally, this is what me and my partner do, right? Because we're doing velocity banking too. We had credit card debt, right? So what we did was we had our credit card debt. We moved it into the line of credit, right? We paid off our credit cards. They're to zero. We moved the debt into the line of credit. So now we have to pay the line of credit. But with velocity banking, what you're doing is you're putting your income in first. So let me get all my coins together. Okay. Paying this off, right? Paying this down. All of our income on the first of the month, okay? The first of the month, all our income goes in, right? But if you get paid bi-monthly, that's fine. The 1st and the 15th, your income goes in. Or if you get paid weekly, all your income goes in, right? So the 1st of the month, our income goes in, right? Then throughout the month, our bills come out because they're on auto pay out of our checking account. So like the 5th of the month, I transfer the money for our bills, right? So let's say our bills are $500. Keep that in there. $500, right? So on the 5th of the month, I'll transfer $500 from the line of credit to the checking account so that the bills, they're on auto pay. They're auto paid out of the checking account, right? Then when it's time for the rent to be paid, I'll transfer the money from the line of credit into the checking account to pay the rent, right? And then when it comes to the 15th again, we get paid again or more income goes in, the income goes back into the line of credit because it's trying to pay down this debt, right? So logistically, I hope that makes sense. Please don't laugh at my glasses. I tried to make it easy. So I hope that logistically helps some people because a lot of people may be confused or know that you can't pay rent or mortgage out of a line of credit, so they don't know if velocity banking can work for you. It can. So if you're new to velocity banking, what you want to do is get a line of credit. Usually you can get a line of credit through whoever you bank with. Chase, Bank of America, all this kind of stuff like that. But you can try to get it through a credit union also. But I will tell you, if you have a banking relationship, it's much easier to get a line of credit. What I mean by banking relationship is like you have a checking and a savings with that bank, or you have your mortgage with Citibank or something like that. Like you have some type of account or accounts with a bank. because it's kind of like a relationship. Like the more things you have with a bank, you have a relationship with them, they kind of know you, so they feel comfortable getting you a credit card or giving you a line of credit because you have a relationship there, if that makes sense. So another thing is, you gotta have decent credit to get a line of credit. I'm not gonna lie. You gotta have decent credit. So if your credit's in the 700s, you're probably gonna get approved for a line of credit fairly easily. If it's in the 600s, like under 660, 680, I don't know, you might have to roll up to the bank and sweet talk one of the personal bankers and explain your situation. Like, hey, I'm trying to do some debt consolidation, I'm trying to get a line of credit. What can you do for me? Like, it doesn't hurt going up to your bank, having the conversation to see if they'll open up a line of credit for you. So I hope that helps out. I hope my cups logistically worked on how you move money back and forth between your line of credit when you're using Velocity Banking to pay your bills. So if you like this video, give it a thumbs up, subscribe to the channel, and I'll see you on the next one. Bye.